So this is one thing which we are currently struggling with ourselves.
Right.
Because what you need to understand is that the guys who have already gotten funding, right? Now they're blocking the funds in the system by keeping them unnecessarily in the system. So you do have early stage investors. Once they start getting the exits, they will start pumping that money back into new startups.
Right.
But in case the old startups continue to hold on that money, the problem is the angel investors who are seasoned, who have been in the system for long. Now their money is stuck, so they would not be investing in newer startups. So this money is like a flow. You need to let it flow. But what we struggle with is a lot of founders in their mind giving exits to the investors, early stage investors, is not even there. They would be continuing to raise Series A, Series B, Series C. Series A, they are raising $5 million, for example, right? The strategy could be they could raise $7 million and $2 million could be for secondary. But what I've seen is most of the founders tend to just raise 5 and stop at it. Now, obviously, let's say 80% of the founders somehow struggle to raise even 5. But the founders who can raise further, they don't actually start doing the cap table cleanup. And because of this, since the money is getting blocked, then people are not investing, and the new founders who are coming in the system, they're not seeing those kind of money coming back to them because the pool of investors is limited.
Right.
So what you will see is that once these IPOs hit, right? So once in the previous years, you saw Policy Bazaar, Paytm, everyone doing the IPO. That's the point there was a high in terms of investments, just because people got their money back. Now they started rotating that money. Now with few IPOs lined up, chances are that there would be a lot more money getting into the startup ecosystem again. But this needs to be a constant flow at Series A, Series B, Series C. Because as a founder, you came to someone and said that I'll make 5x in 5 years or 10x in 5 years, right? Now, in 5 years, in case you can make only 2x, at least give that 2x back so that the money can rotate. Because what's happening is the angels generally, there are few angels who are late stage as well, but a lot of angels can play up to Series A, Series B, right?
Right.
So in case you're dragging them to Series F, then you are actually not making the journey joyful for them, and they will then stop investing in the startups, and they will turn towards the public market because it's much more liquid.
Right. And what do you think? Is this because mostly with founder mindset, or do you think on the investor side, let's say large VC funds, they are open to funding, doing those rounds where they're giving exit to, let's say, angels?
So there are a lot of other players compared to VCs, because VCs have got certain restrictions sometimes where they don't want to get into secondary shares, right? But then there are a lot of HNIs, family offices who are putting in, let's say, $2 to $5 million, and large chunk could be done in secondaries. And then there are funds who do specifically secondaries as well, right? So that can be actually sorted, because again, founders are not raising so much money that the secondaries can't be done per se. It's a lot about the mindset that I'm building the business, I'm taking money in, right? But for me, returning that money is not a priority, right? And one thing what we have seen is the companies in our portfolio have started paying dividends, or the companies where the shares are liquid, where they have done a couple of rounds of secondaries, raising further capital becomes a lot more easier. Because now people believe that the money will come back and serious money starts getting in there.
Right. So the amount of dividend doesn't matter. It could be small.
Yeah.
Right.
It just shows the intent.
Right. So I mean, in the startup subculture, let's call it, because it's part of the culture now. It's everywhere, right? Shark Tank, everybody's watching, and everybody knows about startups and funding and VCs. How do we build awareness around this? That when you are taking money, first you need to have that responsibility that I need to pay that money back, and also how do I put premium on the equity, right? Because a lot of time founders, when they're building, they don't seem to value the equity that much.
Right. So these are cases where I met few founders who came to raise equity, and their business was cash flow positive, right? So the idea was, why don't you pick up debt from the banks? And they said banks are charging 10%. We don't want to pay that.
Hmm.
That's why we are raising equity now.
Hmm.
That's a contorted view of the
Right.
equity system, right? Just because equity SHAs have been lax, chances are people feel that equity is a money which will just lie in my company till perpetuity, till the time I exit, right? So what we have started seeing recently is that lot many contracts are getting changed where there are royalty deals coming in, where there are profit share deal coming in, or there are, let's say, clauses where after 5 years or 7 years, in case company has cash, there needs to be a necessarily buyback. Right.
Hmm.
So now what investors have started seeing is that probably 7, 8 years back when we entered the system, what we felt is that the exit will happen naturally. But since that natural flow is not happening, now investors have started putting a lot of these conditions. Now, once you look at Shark Tank 1 versus 2, right, there were a lot of royalty deals which came in just because of the same factor that investors need to start seeing their money back, right? In case I invest in a D2C startup, now D2C startup scaled from 2 crores to 20 crores in 5 years, right? The founders are taking a bit of salary and everything, right? But I'm not seeing my money back.
Hmm.
So that's the point. All these royalty deals, rev share deals, or a buyback actually tends to come in. So the structuring of the deals is going to change somewhat in the ecosystem now.
Right. Right. And let's go back to the execution bit, right?
Mm.
What are some of the common mistakes which you see founders make,
Mhm.
especially after, let's say, at seed stage or even before seed stage,
Right.
from execution point of view?
Right. The biggest mistake which we feel is that a lot of guys are building tech,
Hmm.
and in their mind, the customers will come and die for their product. That
Hmm.
I just want to buy this. So they are in so much love with their product that they build the product, not thinking about how do I bring the client in. When we look at even the large players like HLL, Britannia, whoever it is, right? Everyone is doing so much marketing, so much sales just to get the customers in. You are a no brand as such, right? In case you're selling 30, 50, 100 crores revenue, you're not even a brand, right? People talk about a 10 lakhs monthly sale as I'm building a brand. Now that's something like a misnomer for me. But still, like the whole idea is that once you get into the selling piece, right, you need to know exactly how are you going to reach the customer.
Hmm.
And the cost of reaching the customer should be less than whatever your gross margins or your net margin is, just so that you can cover your cost. There is no fun in selling something for 100 rupees when the cost of reaching the customer is 80 rupees or 120 rupees.
Right.
So that is one big problem what we see in the system, is that people feel customers will come in. Secondly, a lot of founders are afraid of reaching out to large companies for selling in the B2B side, because they haven't have the experience of talking to the large players. So the second problem which we see in the system is that on the B2B side of the sales, people, the founders are the guys who need to sell their product initially to see if it works. But they tend to hire the sales team early on, hoping that someone else will be able to sell their product. Now, in case you're the founders, you don't have the right skill set to sell, then it's a difficult journey for you to build out a product which sells.
Hmm.
Thirdly, what I've seen is a lot of time people start businesses with their friends and family, right? Where the skill sets are homogeneous, right? So everyone is a CA, everyone is coming from the same engineering batch. So everyone is a techie, but they don't have a CFO or a sales guy. So your team composition needs to be stronger and diversified.
Hmm.
Finally, let's say on the other side, the thing is that a lot of times we continue to beat upon something which is already dead. So in case your product is not working, clients are not willing to pay for it, then you need to either enhance the feature or change the product altogether.